because let's say you entered somewhere over here and you kept your stop down over here, and now you're looking left and you see all this range here to the left. You see all this move you can catch. So you measure that move, right? You measure that move and you see, okay, how big is this move? Let's take a look here. So you measure this move. So let's say you entered at 400 and you see that it tops out at around, let's say 700. So that's 30 pips. So now you have a 30 pip range. This is a 30 pip range. So now it's up to you. Where do you want to take profits? You have the 30 pip range. You can catch, you can secure 15 pips and you can let one run with stop loss at break even, or you can close everything at 550, which is going to be 15 pips, or you can that's all up to you. But you need to have a range. You need to know that there's enough range the price can cover, right? Because if you're taking buys, you need to know how far can price potentially go. And then it's not always necessary that price is going to go all the way up there. Sometimes price is going to go halfway, man, and then it's going to reverse. So if you're holding positions with nothing at break even, you're going to end up in a net loss, because you'll say, oh man, I expect the price to go all the way up there, but it reversed, this doesn't work. No, trading does work. You just need not to be greedy, because sometimes price will not go where you want it to go. It's going to go halfway there and it's going to reverse back. Because, man, like a lot of times my positions get stopped at break even. I'd say 6 out of 10 times they get stopped at break even. 6 out of 10 times. But before they get stopped at break even, I always secure some profits and I let 1 or 2 positions run. Right, let's go forward. How long would you let that 1 position run? That's all up to me. That's all up to me. Like if it gets to where I thought price would go, I would close it out. But if I feel like, hey, maybe it won't go there, then I might, let it run. So because that last one you let run, that's a risk-free trade, man. That's a risk-free trade. Even if it goes to 100 pips, awesome. Or if you get stopped out at break even, what's there to lose? Nothing. It's a risk-free trade. So this is the 1 hour time frame. So see how clean the 1 hour is. Before we had the 30 minutes, so we had this little messy thing here, but this is the 1 hour time frame now. See how clean this is, the 1 hour time frame. You had support formed, and then you had this support form, this candle closed with no wick to the top, but look at this exhaustion here. And then you had this candle here form exhaustion too. So when you're only looking at, let's see this. So when you are only looking at this information, right? This information would tell me that, hey man, we're gonna start heading up. But looking at the 30-minute or the smaller time frames, you'll see a lot of information. Now let's look at the 15-minute time frame. Yeah, see, this is the 15-minute time frame. This is where that 1 hour started to form and it started to continue up. So now if you look at how the market structure is forming, we had a movement up and then price started to consolidate. See here? Price started to consolidate. You had the bearish candle, then you had the bullish candle. So 15-minute created support for further movement up. So that's how you look at the smaller time frames. And then you start to realize, oh, okay, this makes sense. This can potentially continue moving up, and which it did. But on the 1 hour time frame, you won't be able to see it because it's just one solid candle. All right, so what do we got over here? What do we got over here? We have a bullish candle forming on the 30-minute time frame, right? So when you look left, you see that it's coming into some sort of a potentially rangy area somewhere over here. So we wait for the next candle. There you go. We got a bearish candle here. So now what's going to happen? This has the potential to continue moving down because it reached some sort of a resistance. Bearish candle closed with no wick to the top. Tiny, tiny, tiny wick, right? So it didn't really even attempt to go up. I usually let it run until the next zone if it has momentum during session. Yeah, that's pretty good. So, you know, it had no range to the top, which means it didn't even try to go up. So it tried to go down more. So maybe having a stop above this 30-minute can be a great idea because now you're expecting this wick to fill and then continue down to the support. We have support right down over here. This, now we're starting to come down. So now we're starting to come down. As it starts to come down in this consolidation box, you're thinking to yourself, okay, now there are two things going to happen. It's going to come down, and there's a very, very high chance that it's going to start to go up. And there's a very less chance that it's going to break down. It's not going to break down unless we don't see a candle break down. If no candle breaks down, then we're breaking up. Makes sense? So let's go forward. Oh, we have this weird candle close here. It's 30-minute chart. There you go. There's the next candle. So could this be a trade? What kind of trade could this be? Okay. Why can't it be a sell? Okay, Matt Lopez wants to wait. Why can't it be a sell? Wait for a retest. Retest of what? What's the price saying? What's the candle saying? There we go, Santana. There we go, Santana. Santana said it. Santana said it. So look at this. This candle came down. This candle came down. It couldn't go further down, so it closed here. And then this 30-minute candle closed bullish. So we're at support, right? So a stop loss below the 30-minute candle. And then now if you're saying, okay, if it's going to head up, where it's going to head up to? You look left, you see this clean move down. Maybe it's going to go up till here. Ah, Santana was right. Because 30-minute forms support, right? And the second step is you put your stop loss to stop below the 30-minute candle. And then whatever happens, happens, right? Because you took your one trade. Because now look at the time. Keep looking at the time. Look at this. This is 12 p.m. Eastern now. Consolidation time is about to start. Down, see this? So now it's, oh, what's happening over here? What is happening over here? So it formed resistance. This candle was bearish. This candle was bearish. This candle was bearish, but it rejected. And then this candle tried to go up, but it closed below this candle. Yeah, seems like more consolidation, exactly. You stay out of it. Oh, start to go down. Starting to go more down. Oh, I see consolidation now. So this area here, this was the trade for the day. What is this? This is started at 700, 147, 700. and the top of the range was 148,200. So 50 pip range. What time was that? This was 10:30, before London closed. Wouldn't you trade the top as a fake out? I wouldn't, because you know, at this time I'm not even looking at the charts. Look at this time, 1:30 p.m. Yeah, but if it happens when I'm trading, then I would take this as a fake out. I'm glad you mentioned it, because I put this here to see if someone mentions it. So it's just the time. So see, this, even this is a fake out setup, it's out of my time frame to trade. It's not in a time when I should be trading. So I'm always, so I'm not even looking at it. Yeah, always keep in mind the time you're trading, your trading time. Okay. This is the 15-minute. Now you see more information on the 15-minute. See, we had a 15-minute, we had resistance here, its price came down, started to, you know, do a little retest and continue to move down. Then this move down was a move on the 30-minute. This was the 30-minute close, and then the price started to move back up on the 30-minute. But then 15-minute, this looks like more, this is more confusing. But in the 30-minute, it was way cleaner. It was very easy. Okay, see the difference. This is the 30-minute. Look at this candle here. And this is the 15-minute. These candles here. Such a big difference, right? Huge difference. All right. So we have support formed here again. Yeah, 15-minute and low time frames, man, they're just, you're just calling for trouble. I don't like them at all. They're just calling for trouble, you know. So we have support formed here on the 30-minute. So now two things can happen, right? Either price is going to continue up to this level. Don't worry, this line here, this is from like with, and then if price breaks down, it's going to probably come down to this support, right? So what are we doing now? We are identifying where price can go. If price breaks down, it can go down to here. If price starts to break up, it can maybe go up till here. Okay, let's see what happens. Let's see what we get. All right, what is this? What is this candle? See, now this is going to be a booby trap candle here. A booby trap candle is a fake kangaroo tail, like this candle. This would say that, okay, we're going back down, but if you look left at this area, you will find that this candle closed above here, and this candle also closed above it. It doesn't matter what the candle closed like, it matters where the candle closed. It closed above that area, right? It closed above that area. Wait, next candle. Okay. Yeah, let's wait for next candle. See, fill the range. So stop loss here would have been perfect. Stop loss below the breakout candle. But hey, if you're waiting, you missed the move, that's okay, you missed the move. That's perfectly fine. Where I would have entered at this candle having a stop loss below this breakout candle, the 30-minute candle. Yeah, that was a very weak bearish close. Yeah, I would have missed the move too. But now let's see what happens. Oh, it's starting to go down. Maybe it's going to start to consolidate here. But also, check this out. It reached resistance and it formed a bearish candle. So maybe having a stop above the 30-minute candle and expect the next candle to maybe retrace up and take sells and then go down would be a good idea. London push. Yeah, this was a London push, you're right. Let's see how far does it go. Now you see the size of these candles. The size of these candles, they show that that price is in momentum now. So the momentum is down. So when momentum is down, you're constantly looking left, right? So when we're looking left, you see, okay, if it's heading down, maybe it should come down to the support here, right? Because this is the support and this is where it should have some issues. Came down to support, take profits, and then, you know, you let the price, whatever it wants to do. So now we're coming into pre-New York. I hope people are looking at the time. We're coming into pre-New York. Let's see what happens. Oh, we have some sort of consolidation. But looks what happened. 7:30 a.m. pre-New York time. So what's happening now? We formed support. This bullish candle, it closed above this candle and this candle. Make sense? Yep. Engulfing candle suggests change in direction. So having a stop, yeah, having a stop below the 30-minute candle, and you can anticipate a move up. Right? So now if it's moving up, you're looking left to see how far will it go, right? Maybe till here, maybe till here. A greedy person will say all the way up to the range, you know? But a smart trader will say, well, maybe halfway, and then maybe let one run wherever it wants to go. Now it's just going to start to consolidate. Okay. I'm greedy, we're going to be smart. Yeah, see, so now this, another thing here. From support, 30-minute. 30-minute is higher confirmation and it starts to go up. But I guess by now, you guys get the point. That it's really important to read candles. Yeah, that's fine. That's fine. You could stay out. That's what I said. It will take time. You know, it will take time for you to really identify that, okay, what candles are trying to say. Plus also you gotta realize is that we're doing analysis on different pairs as well. Like we moved from GJ to GU to UJ, EJ, this is USP CAD. Right? So let's go to the next chart. So this is the 1 hour chart here. So you see how cleaner 1 hour chart is? That you see this candle came down, this formed support, bullish candle. So next one you can say that, okay, you know what, we're probably going to move up. Mirroring moves here. Even this on the 1 hour too. So the point is, all you got to do is you just got to wait for price to form supports on the 30-minute or the 1 hour, like support or resistance, you know. And then let's go to the. I'm actually having lots of fun. I'm having lots of fun over here. So we're gonna move to the next one here. Let's move to the next one. Oh wow, okay, what's happening here? All right. Interesting. Okay, so this is the 30-minute time frame. Price broke down. What are we doing here? What are we doing here? I guess we're just waiting. Do you use trend line sometimes? No, I didn't use trend lines at all. We're probably going to wait over here. Probably waiting. Price is starting to move up. Move up. So now when price is starting to move up, what you're trying to do is you're always trying to see that, okay, if price is moving up, you're waiting to see, okay, it broke this support, right? It broke this entire area. So now maybe for price to come down, yeah, exactly, right? So it needs to fill this void, right? It needs to do a retest somewhere here to continue moving down. So let's see. Okay, so we got this candle here. The candles are starting to close in. So basically, you can still say that we will try to go up. So now you see this. See this exhaustion candles and this exhaustion here as well, right? So now look at this. This was 7:30. This was 8 a.m. 8:30. This is 9:30, right? So if we look on the smaller time frames, this move is consolidation, right? This is just consolidation. And when you are a retail trader and you're looking to see that, okay, you know what, this is probably going to come down right now, but what you don't realize is that look at these exhaustion wicks here to the bottom. These are all exhaustion wicks to the bottom. There is no indication that it's starting to go down. Look at EJ right now. EJ right now, market is closed. So, you know, this should continue pushing up to fill the range. Next candle. And then let's go to the next one. So, see, so now, haven't we seen this a lot now? Let's look at this candle here. See this area? This candle closed with no wick to the top. It closed at resistance, closed bearish, right? So isn't there a big chance that can continue moving down? Those were booby trap candles from everyone who wanted to sell. Yeah, exactly. Yep. So now you can say, okay, if it's going to come down, now it has the ability to come down because it's rejecting this area. Slowly but surely. You catch a fifth, put a stop above the candle, and then you let it run. No wick candles in zones are also a great indication that the next candle will go in the opposite direction. Yes, that's absolutely true. Sell on the small 30-minute candle close? Yes, because if you're selling on the 30-minute candle close, even right here, now you're anticipating this wick to get filled, right? And this is GU, and so GU gives some pips too. We're gonna look at it here in a bit. Let's see if it starts. So it came down to support. Perfect. See, so if you're looking at this price, 31400, then this is 31300. So it's 10 pips. And if you're waiting for the bottom of the wick, this is 31000. So it's almost like 40 pips. And then, like, as you move towards 12 p.m. and 1 p.m., you start to see consolidation, and we stay out of this. Well, a booby trap candle is just the name of a candle that will try to throw you off from your trade. Like, let's say sometimes what happens is that you have a bullish candle like this, you have a bullish candle like this, and then out of nowhere, you're going to have a bearish candle like this, right? And then what's going to happen is, so now what this would mean is that, okay, we close right over here. So now this bearish candle formed. So this bearish candle could not close below the bullish candle. So we're still bullish. So now sometimes people get caught in these moves because the next candle, what happens is that it starts to form something like this. And then, and then it starts to go up further. So this candle, this bearish candle would be a booby trap candle. How would you explain a double top or a double bottom? Well, a double top is when price comes to a resistance and it rejects it, basically, right? Because this can be a double top here, because if this was news, So price came up, right? Went higher up in the range, but closed down here. So if you look left, this is a consolidation area. So in terms, this is also resistance. The price went down, came up again, tapped into resistance again. So now you have a double top. And double bottoms are the same thing. Like if price made us support here, somewhere down the line, if price comes down to support, it's going to bounce from it too, because it bounced from it once. So there's a very high chance it's going to bounce from it again. So then you can say, okay, you know what? Okay, now we formed a double top. We formed a double bottom. Let's move to the next. Okay, so this is the 15-minute. Okay, let's go to the next one. All right. Oh, okay. What's happening over here? All right. So basically, okay, I'll let someone do analysis on this. Possible fake out? No, this is the 15-minute. So you have, first off, we have resistance here. Okay. And then we have support here. Okay. Possible fake out. JC said fake out. Would say is a fake out. Price to go down. Stop loss on top of the 15. TP bottom of the range. Yep, absolutely right. So you can take a stop loss right here, because if you're saying this is a fake out, then there's a very high chance that it can break down. So once it breaks down, you're looking left to see how far is it going to go. Make sense? Oh, nope. Oh, why does it make sense? Practical tips. Why does it make sense? Practical tips. There was no retest. For what? To go down? Okay. No, that's fine. But what we're talking about here is, let me just read. There are two things that you can do, right? You had resistance, price broke out. You agree? 15-minute was right over here. But now you're also looking at the time. See, 7 a.m., 8 a.m. And then when you came to charts, you're seeing this 15-minute candle closing back under resistance. So now, technically speaking, it closed back in the range, right? But now, if you're still being cautious, you know, if you're a very cautious trader, that's fine. You just wait. So now, oh, okay. So now you see this kind of form down. So if you're looking left, you notice how this candle is closing below all the other candles. Yeah, so maybe this is the time where candle will continue falling down. Came up. Do some sort of like a move to break even. Perfect. Yeah, see, guys are following. They're all new guys. Continue moving down, and then we still have this range to fill, and then move down. But whoever mentioned that this was a fake out from the top, that was perfect. Because this way you entered price super early from the top. Yeah, exactly, and you're posted on the ground. Should have increased my lot size. Yeah, exactly. You know, so you enter from the top anticipating a fake out, and then 70% of the time, if it's a fake out, it's going to continue the opposite way, and that's what happened. Okay. Okay, let's go next here. Can you explain booby trap candle, please? Yeah, booby trap candle. It's just a name I made to better, better relate things to myself. I mean, on the higher time frames, those are just retest candles. Because if you look at this candle here, this closed below all these candles here to the left. And then this was a retest candle, right? So if it's a retest candle, it basically means that the candle after that will continue going the opposite way. All this explains why I'm trading stuff. Oh, Practical Pips is a troll. Okay. Yeah, that's why I didn't want to post it in everywhere else. Yeah, so when a retest candle like that happens, it just means that it's an opposite way candle, because the candle after that will continue moving where it wants to go. So really understanding booby trap handles and breakout handles, it all depends that you need to see it happen over and over again. Do you just kick? Yeah, because I don't want any distractions, right? Like, people paid good money, and I want to make sure everything is done correctly. So I don't need any distractions. So that's the thing. Most of the concepts you will see here, you will understand them way better once you see them happen live in the market over and over again. Trust me, when I first saw breakouts or